Imagine a financial system where corporate supply chains are instantly settled via smart contracts, and rural citizens use blockchain for their daily grocery shopping. This is not a future concept. This is about to be the reality in Japan today. Welcome to episode 85 of Japan Digital Asset Weekly. I'm Keisuke, CEO of Wakyodo and the venture partner at Tsuruha Capital. Last week, in part 1, we explored how Japan's largest megabanks are collaborating to issue a unified stablecoin. Today, we conclude our series by focusing on tokenized deposits and how Japan is achieving massive real-world blockchain adoption, scaling from global enterprise settlements all the way down to local retail payments. Let's begin with enterprise automation and the power of a tokenized deposit. Unlike stablecoins issued by trust companies, tokenized deposits are issued directly by banks, meaning they are fully protected by traditional deposit insurance. A major milestone in this space was achieved in May 2026 using DCJPY, a tokenized deposit network backed by a massive consortium of Japanese corporations. 9 companies, including retail giant Tsuruha Holdings and consumer goods titan Kao Group, successfully demonstrated the complete automation of complex B2B transactions by connecting their standard commercial data system to the blockchain. They generated commercial transaction tokens. When goods were delivered, smart contracts automatically executed the process payment using tokenized deposits and instantly reconciled the accounting records for both parties. This completely eliminated massive amounts of manual invoicing and accounting work, proving that programmable money can drastically cut operational costs. Furthermore, Bank, Japan's massive postal bank, has officially adopted the DCJPY platform and is preparing to launch its own tokenized deposits by March next year, targeting digital securities and smart contract-based settlements. On the international front, Japanese tech companies are aggressively bridging the gap between legacy banking systems and the blockchain. The tech startup DataChain recently secured a patent for a stablecoin remittance system that integrates directly with the SWIFT network. Through an initiative called Project PAX, Japanese and South Korean financial institutions are testing cross-border stablecoin transfers that are triggered by standard SWIFT messages. Simultaneously, the Bank of Japan is actively participating in Project Agorá alongside the Bank for International Settlements. Just last month, they successfully tested a prototype using central bank money and commercial tokenized deposits to achieve atomic settlement. This means massive cross-border trades settle instantly and simultaneously, completely eliminating the risk of settlement failures. But perhaps the most impressive breakthrough is happening in the retail sector, specifically in Ishikawa Prefecture. Hokkoku Bank launched a digital payment infrastructure powered by Tochika, which is Japan's first deposit-backed stablecoin. This application is not just for tech enthusiasts. It was designed for everyone. By partnering with local governments, the bank distributed regional inflation relief subsidies directly through this blockchain application. To ensure nobody was left behind, the bank provided comprehensive in-person support at their branches for the elderly. The results are simply staggering. As of May 2026, the platform surpassed 150,000 registered users and 100 million yen in monthly transaction volume. We are currently seeing citizens in their 60s and 70s seamlessly using a blockchain-based stablecoin to buy their daily groceries at local supermarkets. The success of Tochika demonstrates that when digital assets solve real-world problems, like reducing administrative costs for local governments, they can achieve hypergrowth. This is a definitive proof of true mass adoption. Here's Wakyodo's take on Japan's market structure. Japan is successfully operating a highly balanced two-tier digital payment system. On one side, we have trust-type stablecoins designed for massive, borderless corporate transactions and interoperability. On the other side, we have tokenized deposits, which are fully protected by deposit insurance and tailored for highly programmable domestic commerce. This dual infrastructure, combined with the historic tax reform, moving towards a 20% flat tax rate, removes the final barriers for institutional and retail investors to fully embrace digital assets. For global blockchain operators, infrastructure startups, and protocol developers, the Japanese market is no longer just a target for speculative token listings. It is a massive, real-world deployment zone for institutional technology. If you want to connect your protocol or service to this rapidly expanding ecosystem, you need an experienced partner who understands both the technology and the strict regulatory compliance required by Japanese banks. Visit wakyodo.co.jp to learn more about our Japan Lead as a Service and how we can facilitate your strategic partnerships in Japan. Thanks for watching and see you next Monday.